Hey everybody, welcome to Wednesday, March 18th here, and this is a post the Fed meeting. So what I wanted to do here was just kind of show both the bull and bear scenario setups, and try to keep it abbreviated, of course. And I think that the big day is going to be what happens tomorrow. So share my screen. So basically, what had happened today was, the Fed kept rates, just flat like normal, and sorry, yeah, I got the right screen. Okay, yeah, the Fed kept rates flat as as everybody expected, but the commentary afterwards was not very favorable. They Powell was talking about some, like unfavorable data and things like that, and that's wasn't very good for the overall overall health of the market here. So what we ended up seeing today was pretty decent pretty decent rip down here, but it was more like a stair step sort of selling. So I think there will be at least like one little bounce here, but it's looking a lot more bearish than bullish at this time here. So this is the chart from last week. I always like to try to start from the chart from last week here and just kind of show what the forecast had been. So this is pretty much following the path here. You can make I mean, it's been nothing but ABCs here. So here, let me do a different color to highlight. So you can see that we might have a ways to go here, and that's if we just see more of this grind down. This turquoise line here, this is the 200 the 200 simple moving average, or the daily moving average. Nothing exponential or anything like that, but pretty much every time we've seen a test of this line, we've seen some sort of bounce, and that's like you can see around here. We can also see the last one that we had that went a little bit deeper, and now we had one the other day. Well, I guess Sunday, and then we saw some sort of bounce, but it was kind of a weak bounce anyways. I think going into the Fed meeting, everybody kind of knew that they were going to hold rates flat just because oil's top of mind for everybody. And actually, while I talk here, I want to see see how oil responds since the market's just open here for futures. But basically, so I'll go over the bear scenario first. The bear scenario is really just a continuation down of this C leg here, and I think it's here. We've had this. Excuse me. We've had this like kind of consolidation zone here where it's been a long at the bottom, a short at the top, and now we haven't really reached as high as as high as people would have liked to see. If you look at something like the S&P, here's my crayon drawing from last week. But if you look at the S&P, and actually I want to show you a different view of this. We've got some moving averages. I guess last night you could see that. Actually, I think it was with the Nasdaq. Yeah, here we go. So it's kind of a mess. The Nasdaq here, it was kind of right in between this. This is the 21-day moving average, this blue line, and then we had the 50 as it's purple. So we did have a crossover. So it is technically bearish, longer term here. But the big thing to remember is that if we did have a trend line touch, which we did not, then that would expand the range. But it kind of looks like we had just like a normal B wave. So just looking at this from like a normal kind of like what I think is probably going to happen here is you'll probably see a little bit more selling through this trend line again. The trend line we've had that continuously move down, but the last one that we had here from Friday the 13th, that one seems to have held, I guess, reasonably well, but you can start to see some of the volume declining. It's not as pronounced on the Nasdaq, but you can certainly see a lot of sell delta here. Now, what I think is important to note is that things don't go really down in a straight line. So while this might look bad now, you're going to get a lot of bulls that are going to try to recover some positions. This actually looks like a nearly complete ABC down, you'll probably see a little bit more testing. But this is just short term. So, if you look at 1 degree higher, you might get a like to where things started to sell today. Right around this like the 24,600 level, and also for the S&P, it was kind of like right around the 6680 level. So with that being said, this is kind of like thinking that this is kind of the projection here. I don't know if we're going to get this high of a retrace. I think that there's one of two things that can happen here with this bearish scenario, and I think it's probably better represented on the Nasdaq chart. Get a cleaner view. Sorry, I'm jumping around a lot. So we kind of know there's this ABC here. I've been showing this for a while, but with a C leg, typically you can see like a 5-wave down sort of thing here, like this. I think this is probably a little deep for a wave one here, for like a for a 5-wave structure, because this entire thing has been just ABCs down, up, that whole sort of thing. But I still think that you'll see something that's similar, or that resembles something like this. Like if you measure it out, it's probably extended here. But for right now, let's just take it a day by day. So I'd say like that's the short-term scenario where you could see maybe like a continuation down and maybe make a lower low here, a lower local low. And if you draw just like a little short trend line here, you should be able to see that it kind of looks like some sort of like descending sort of wedge kind of thing here. And this is, I guess, short-term bearish, but longer-term bullish. I'll go over the bullish scenario here in a second. But again, this 200 daily moving average needs to be tested a couple times, and but the sellers are gauging the response of buyers and seeing like what the bullish energy is for how these guys bounce it, or if they don't. So if you see a lot of weak bullish action, then that will typically mean that you'll see maybe like a 2 or 3% down day, like a wave 3 or C leg kind of thing. Now, if you're not fluent in Elliott wave terminology, that's okay. I guess I can distill it down to be really easy, where it could either be something like this, where we just get a quick little ABC, but that's probably like a week long kind of move. I think you'll probably see something just a real small bounce, maybe like this, where this is probably your 1, 2, 3. Yeah, this is probably your last little leg down. If you don't really see, sorry, let me put it this way: if you see, buying overnight and kind of a decent bounce, you could, you probably get a lot of selling in the morning, or probably won't last very long at this level. So if you have some trap longs, it's probably a good opportunity to bail on them. That's I guess the short-term sort of scenario. I guess kind of like I was mentioning before, a little bit more of an extreme bearish case here could be seen sort of like this, where like it's like it's kind of like a 5-wave down. The selling today kind of seemed like a wave 3, like on the larger scale, just because it was really, I think it was really strong, just like consistently strong at least. So like normally with Fed meetings and things like that, you get at least a little bit of back and forth. And today there was just nothing. There was no bullish answer. And typically, I think I said this in the morning post, that typically the first day is not, like the real move. The next day typically comes the real move, but that's really only true if you have some back and forth. And today there was nothing. So with that being said, it kind of feels like it's a wave, like a wave 3 sort of, at least like a start to it. Now, it's kind of like the same scenario as the ABC. You might see like a short run up to where we had the selling start today, and then you probably have another little wave down here. So that's kind of what I'm expecting here for like Thursday, Friday, maybe in the next week. It seems seems pretty reasonable. So that's I'd say probably the more extreme bearish scenario. Now let's look at the potential bullish paths, and it's getting a little hard to come up with this, just because it seems like it's very it seems like it's kind of a foregone conclusion here that you'll see some sort of pattern completion down to this level. Again, with the strong selling today, I do think we'll get some sort of bounce like this. But oh, somebody joined. Nope. I just got the go to meeting thing. 1 second. This happens to me every time. Okay, got it. So back at it here. So the bullish path is something that if you did see a bounce, and it was like a strong bounce kind of thing, we would probably have to have some really good news for that to happen. So like, let's say you get a Trump tweet or something like that, you could see some sort of launch up higher, but that would have to be like some sort of really good catalyst. You can see we got a ton of sell delta here, and that's going to be really hard to punch through. And you can kind of you could see that over the last couple of weeks, where every rally has kind of been sold down here. And one other thing to call out is this is a pretty well-defined pattern. This is like your it's called like a rounded top, but something else you could see is this turn into a inverted cup and handle pattern. So you could see something like this. The trend lines I don't think are accurate yet. Like you could see a number of things. You could see, I'd say this is probably low probability, where you'd see like a triangle consolidation. I think we've already had enough consolidation. You can see the weakness here. But I think you also might be able to see maybe some sort of wedge here. Like some sort of like a ascending wedge where it has just marginal new highs. Again, it's kind of weird saying that when you're looking at it at the low like this after a big sell day. But I'm always amazed at the ability of the bulls to buy when really there's blood in the streets. But again, I didn't really think it was like this huge waterfall of selling today. But that's kind of like how a wave 3 works. It just kind of keeps going, and every attempt to buy the dip just kind of fails. So I think you probably get like one opportunity here to exit trap longs, but since we're doing the bullish case here, I think that you could make the argument that you might get some sort of like some sort of handle here for like a cup and handle pattern. I guess a longer term bullish scenario would be so I guess I would say, like, in summary, short term bear, longer term bullish. Like you could see, let's say you see this thing where it's got support here. Then you could make the argument that you could see a recovery. I don't think you'd really get like a new high. I think you'd probably get something like this, where it might stay like, you might get some sort of like inverted head and shoulders thing like this. But still, I think that the days of new highs are over, unless there's a significant catalyst that push markets back in bullish territory. But to be fair, in prior experience, it's just sometimes it just takes a 1 or 2 days worth of really good news in a row to get markets pumping again, and people forgot all about being bearish. So that happens. So that's, I would say, my longer term scenario for indexes. So we've covered short term and the longer term. So short term being like a little bit of bounce and maybe a continuation here, but longer term, this might be it. It meaning this might be the actual like wave, like the C leg down here that we've been waiting for. At least like waiting for like to buy the dip. I don't think any of these little dips here have been appropriate to buy. I think these are garbage little 1% down stabs. The bulls and bears are going to fight it out tonight for sure, but I still think that it's got a definitely like a bearish bias here throughout the next couple of I'd say like at least a week or two. We do have OPEX on Friday, and typically that drives markets up. But we do have a lot of negative gamma from options data on the books. So I actually think it's probably going to be driven down more by Friday. So I guess it remains to be seen whether that'll be correct or not. But after the news today, I think that people, or at least like deeper pocketed traders, have either tried to set a floor, but all of those floors today were broken through. And then I think tomorrow is just going to be more of like a recovery sort of day, maybe like right away in the morning, and then we'll probably get a continuation. But yeah, so that's the indexes. All right, let's move to these other guys. All right, so the yield, this one here, I did close the TMB trade, not because excuse me again. I closed the TMB trade not because I didn't think it could really go higher. I just think that TMB, it doesn't really move very fast, and it's taking up capital. I think we could deploy in like some better single stocks or something like that. So that's kind of why I think might be better to just get out of this. Plus, so we don't really have a lot of bond traders in the service. So, anyways, I think it's kind of like MSTR. Like if I can get out of it, which I did, I think I'll probably shift coverage to something else that's a little bit more exciting. But anyways, like the story here with the yield is I do think it's going to continue to run up a little bit higher, especially the longer that oil stays elevated. I think that's one of those things that you really need to be aware of, is that there's a very strong correlation between the price of oil right now and anything like yield relate, anything that really signifies inflation. So rising yields signifies inflation. We had this narrative, January, February, that CPI was going down, but that was also with oil. So now that oil is going back up, you can kind of see that correlation jumping back up. So today we did have a decent jump, and bonds got hammered today, but we took profit on TMB. I could see maybe if we get another low here, I would probably take a TMB trade, but for now that's good. All right, let's do metals. So gold and silver. Gold is okay. So it already hit bear target 1 by the close today. So highly likely we'll see this bear target 2. And if I measure peak to trough, it's probably got some sort of confluence here. So yeah, maybe if we have some support at like this 47.90 level, then you could definitely see some some buying there. I kind of think that even if you do get this little push down here, I'm actually surprised it's not going back up, just because metals are typically like an inflation, typically an inflation hedge, and with that, with like bond trades and things like that, and yields, or anything inflation related, I would have thought that metals would be picked up here. But if it's just risk off in general, then that's probably why we're not seeing a good jump here in metals. That could change by tomorrow, but for now, I think probably just wait it out for a minute and wait for some confirmation if you want to go along with metals. Same thing with silver, where you might get you probably will get this extension here down to the bear target 1, but then after that, you could see some sort of back test of something like this, where it just continues down, but you at least get this sort of stair step correction rather than like 30% down in a day, which is ridiculous. So that's metals. So it's going down for now, but tomorrow morning might be a different story. So what else is, or the big ticket item here is oil. So, oil has been oh, weird. Sorry, I don't know why that was like that. So oil itself, it kind of looks like it's making this like this five wave impulse sort of flag here, and it also kind of seems like we're having. So if we do get a decent amount of buying today, but there was a news article today saying that even Iran is shipping their oil through the Strait of Hormuz, and that's one of those things where I think that would be welcome just for general oil supply concerns. So I do think here that the ultimate target is going to be like this, bull target 1, but I think we got a little bit of time yet for it. So you could make the argument here that you'll see like maybe a slightly like an incremental lower low, and then you can see a continuation up. So I think, if the sellers have mercy on the bulls, tomorrow and into let's say, like Friday and stuff. So if we actually end the week like this actually seems a little bit symmetrical, like it's a possibility where you could get a little bit of a relief recovery here with indexes if oil does take a dive, and then you could see you could see a longer or like a heavier sort of sell here with indexes if you do get this last little leg up here, and again it could extend. Like you could see this can end up turning into like a just like a normal pennant or a bull flag or whatever you want to call it. It still looks bullish right now, but there's still that little opportunity here for that very, very short term, 1 to 2 days, maybe 3, maybe. As I see indexes kind of taking a bit of a dip here at open. So that's the initial thought here with oil. Natural gas, we finally got some sort of move higher in natural gas. Now I think it's finally starting to rip up here. Now we've got this, we had declining volume over the last couple of days, and that's, as you guys know, it's always a good sign that there's going to be some sort of bullish reversal, especially with natural gas. You can always kind of see that because like the sellers are just kind of running out of gas. Cracking myself up. My wife's probably thinking I'm weird. She can hear me. Yeah, just talking to myself at this point. All right, so let's look at SOX. So SOX itself, I think, is I think that the top that we had here is probably it for a while. This really does look like a very clear sort of 5-wave pattern, and you could also make the argument here that this is sort of like a very complete impulsive wave. But for now, at least, you could see some sort of correction here, like even down to like 257. When you say it like that, I'm sure people think I'm nuts, but the reality is like we are seeing a lot of instability here. It's been really difficult for stocks to get above 345, and you also get this sort of bearish sort of thing, and it's already actually broken the lower trend line here. But really what this looks like is a C-leg continuation down. So if you look at it like this, yeah, you could see a bit more of a sell-off here, but it actually kind of looks like you might see something maybe like this. So if you're holding SOXL, you probably want to either trim up or add some SOX for like a hedge. But I'm seeing this on a lot of charts. I'm seeing a lot of like the heavier sell delta at these retracement level points, and that's where it gets a little bit concerning. Just because it's like people kind of forgot what a correction feels like, and you can't just buy the dip anymore and then survive no matter what. So I think it's certainly been a lot more difficult in the last couple of weeks to turn a buck here. But I think we've been doing all right with with the different charts and stuff. There was a potential here for like a recovery, and then maybe like a higher high, like I showed before, like with oil, let's say, but it would just be like a 1 to 2 day kind of thing. So I mean, the way the futures are going overnight here so far, it kind of looks like we're getting a decent amount of risk off sort of behavior. All right, so Bitcoin has hit the bull target 1, and then also hit the it hit the 50% sort of, it's not a retracement, it's like an extension level, but it also kind of doubles here at this 0.382. This doubles as a wave 4 top, so that's kind of why it's also the bear target 1, excuse me, bull target 1. And it had a pretty quick, like a pretty quick shutdown of that. So so it kind of like invalidates this pattern a little bit, but I guess if we do have a bounce here, all things should rise and fall with the tide. So at the end of the day, today we, on the hourly, we did get a pretty strong oversold reading. Not like Bitcoin, but if you look at like the S&P here, we got a pretty strong oversold. So I don't really expect that to be the case here. We still don't have it like on daily, but it's creeping down. But in relation to Bitcoin, we are starting to see now the volume decreasing, and like we just talked about with gas, that's a really good sign that things are highly likely about to probably going to roll over here. So if you hold MSTR, that was down a couple of percent today, but if you hold MSTR, these two are joined at the hip, so you probably want to be careful with that. If we get a bounce tomorrow, I will be adding some hedges with SMST. All right, Nvidia. This one, it kind of looks like it wants to fall. Again, we could have one more sprint up and one more slightly higher high, like to maybe 190. But if stocks doesn't cooperate, those two are very interrelated. So I think you'll have a little bit more of a washout or like a wash down. So let's look at something like Tesla. Tesla, I don't really know what it's doing right now. It's just sitting there and consolidating. The volume itself has actually been very high. I think Tesla's kind of a unique case where like you have a lot of it's like you always have to have some sort of bright shining star in a crappy market, and I think Tesla is that bright shining star in a crappy market. Like people don't want to give up the glory days of just buy the dip. So I think you're starting to get a lot of institutional players that are accumulating here at this 200, this 200 daily moving average, and I think you'll start to see some like upward movement here soon. But it still could head a little bit lower, I think, and do that like short little capitulation move, and then that would be a great dip to buy. I think I've had it in the like the daily notes and stuff that if you can get 375 or 360 for an entry for Tesla, I think that would be pretty good. From like an actual valuation standpoint, I don't actually have not DeMark. I don't have Graham's number on this version of the chart, but it's still like technically overvalued, but it's a cash monster, and Tesla's done a really good job as a company of diversifying a lot of their lines of business. So they've got solar, they've got cars, they've got now they picked up AI stuff. They got it all kind of falls under that like Elon Musk sort of umbrella. So I think Tesla is probably going to be a little bit more resilient than something like Nvidia, because yes, Tesla does have a large market cap, 1.447 trillion, but if you look at something like Nvidia, 4.38 trillion down from 5. That's a massive valuation. That is still, I'd say, probably slightly north of 16% of US GDP. That is a national security risk. And something like 4% of global GDP or something like that. So Tesla's not quite like that, but it's still a mega cap stock. You can still see some selling here, and some volume drying up. So I think that you're probably going to see a little bit of a recovery there. Now switching to MSTR, this does kind of look like an ending diagonal. I've been kind of tracking this for a while, so I do think that it would be at least time to add some hedges. Again, you could see a recovery. This could be a small little B wave down, but the way that equities are going here, I just think that there's just a lot of bad news out there, and there's not really any good excuses to buy. There has been a ton of accumulation here, so if you do see some sort of stab down, and likely like a new low, something like that, you should see some buy up after that. So kind of like we're talking about this with Bitcoin. So if I go on a larger scale here, you can kind of see that this wave force has been kind of playing out. Kind of think you might see some sort of like 52,000, but just like its last leg. Then I think it's actually a really good entry for longer term. like, I mean, if you think about it, if it's lost, significantly more than half of its value. I mean, like, look all this buy delta up here that's gotten trapped. Like, you should see some sort of recovery after. So something like this, for all this institutional buyers to get out of there. And then, you could see something like that. But I think longer term, something like that might take probably 9 months to a year to recover. So that's kind of how the world is looking, according to me today. So, just to kind of wrap up here, like in summary, you're already starting to see a bit of a bounce here in metals overnight. And, in my opinion, you'll probably see a higher, I'd probably see metals higher tomorrow. I'd say oil itself looks like it's at least taking a break for the night, or trying to recover just a little bit, even if it pokes through, makes a little small higher high, which it might, doesn't really matter so much. I think it's we're due for just one more little dip here, but that in conjunction with what the Fed said today, inflation is a concern, so they're keeping rates flat. You can definitely see that with the price action today. Yeah, I think that's you're going to get something kind of like this if we don't get a meaningful decline in oil. I think if you do get a higher high and then it ends up turning into like a bull flag, kind of like it shows today, then I think a strong short would definitely be a good way to make some loot. So okay, that is the long and short. It's another pun for you. Man, it's just knocking them out of the park here for myself. But anyways, I hope you guys didn't get beat up too bad today. Especially if you were long or trying to long. I think that there should be some sort of recovery, because this is like a pretty strong consolidation zone. There's a lot of trap buyers at this level, and I think that you'll see a lot of fighting. Even if there is a lower low, I think that there'll be some sort of excuse to buy a dip, and try to get back out of these recently trapped longs as of this afternoon. Okay, so any questions? Let me know. Send me DM or send something in discussion. Other than that, you guys have a wonderful evening.